Hey everyone, this is DayTraderRockStar, and I'm bringing you a little video on trader education and what are high probability setups. If you know me from daytradingradio.com, I'm DayTraderRockStar, and I preach every day about how to take the risk out of the market and wait for really develop patience and discipline. And with this, I've developed a methodology called HPS, or high probability setups, which basically takes a set of indicators and time frames, layer them on top of each other, and constantly take only the best setups in the market when all the time frames and indicators line up to give you the best possible trade. Now, there's multiple time frames. You could take, there's all kinds of different type of trades you could take: short-term scalps, longer-term swing trades, overnight holds, even long holds. But what we want to do really as a trader who wants to make consistent money in the market, say someone who wants to do this for a living or at least to supplement their income and do it a decent amount of time where they could show good results, or you really have to lock yourself into a methodology and force yourself to take profits, force yourself to wait for the market to give you the best setup. Anything other than that it's pure gambling in the market. The markets are react drastically to news. It's very hard to really gauge anything in the market. Each day there's different analysts that come out and move stocks based on their opinions and their underlying whatever is going out on that stock. So what I want to do is we're going to break down what a high probability setup is for you, talk about the methodology, talk about how important it is to constantly strive to to be the best that you can as trading. If you're going to be successful in the market, you need to constantly better yourself, or at least keep yourself in a very disciplined state. You need to be a computer. You're dealing with computers these days. There's computers, algorithms that are trading the market, and you could see it, how the markets pull back to certain levels. I describe this each and every day live on the radio when I point out certain areas in the market where we're expecting bounces, and these are based off of trend lines, moving averages, pivot points, and focus points on the chart. And you usually see these levels are very actively traded, because a lot of times there's computers that recognize these levels too. Now, a computer or an algorithm has that special ability of not having the emotional side of a trade. It doesn't have fear, it doesn't have emotion. It takes the trade, it sees the trade, it takes the trade, it takes the profit off. And as a human, we could kind of do the same thing, but we're influenced by anything in the news, anything that's in our heads. Unless you're really tuned into the market and you're really not paying attention to outside news and stuff, and you're really focused and disciplined, it's very hard not to have your to start to develop a bias or an opinion on the market. Everyone has their opinion on the state of the economy, the state of the world. They have their opinions on the leadership, they have their opinions on politics, religion, and everything like that just makes you a worse trader. Believe it or not, it does not help the cause. And the reason is the market doesn't care about that crap. The market cares about what it's going to do, and the market's a vehicle for making money. So if you could become a machine, you're going to do much better. And the methodology does what it can to make you disciplined, and actually takes, really sets up the stock, in a way where you're actually taking the risk out of that, most of the risk out of the trade, giving you the best opportunity at that time frame for the biggest move in the shortest amount of time to put your money to work at that time. The worst thing as a trader is to get in a stock and it's chopping around. You're not, your money's sitting there and it's where other things are moving. This enables you to get into the stock as it's about to move. What's good about being a human versus a computer is a computer can tell you the exact time to buy based off of historical data. A human could pretty much, we could logically see that and plan out a trade, and see that happening by technical analysis and understanding how these algorithms work. And to plan out your trade helps a lot. It does help a lot, and it does add to it. That's what we're going to do here. So we're going to go back and take a look at some of the trades that we've been taking this past week, and these are all based off the methodology. So we're going to break them down. I'm actually going to show you clean charts. I'm not going to have them all written out. These are just regular charts you're going to see, and I'm going to break them down for you and talk about why we took the trade, what's a high probability setup, and what's a shorter term good trade, but not really a classified as an HPS setup. Now, an HPS setup has to be the best of the best. That's the cream of the crop. That's something you want to always take. Has to be, defined in a way where it has to be a quality stock. And that's why, I developed the HPS 40, an index of 40 stocks that are quality stocks that we could rotate in and out that based on these high probability setups. So it kind of keeps us in a boundary. We're not always searching the market for the next hidden gem. We want to be able to, get into the Exxon Mobils of the world, the Apples, the Amazons, when they set up. These might be big stocks for you out there, but they're also very, they're easier to trade because they don't have the sudden, they do react with the market, but they don't have that, that potential of the major black swan event. You feel a little bit safer, and that's important because you're dealing with emotion. You have to have at least going into the trade to not get shaken out in this volatile market. You have to feel comfortable. So you want to be in a stock that you at least feel comfortable in. DuPont was something that you could look at on a daily chart, and you could just look at certain levels in the chart. And we're going to go back and we take a look at the daily stochastics. And for me, I'm typically a pullback trader to the upside. Meaning I usually take longs versus shorts. And that's okay. I mean, you could do this the opposite on shorts versus long. It doesn't make you right or wrong. Just, it's just maybe it's a personality trait or whatever it is. But what it is now you could go back and look at the chart, and you can look at each time these stochastics pull back into a range, and we call it the 20 zone, and we pull back down into that level. And we kind of mark that level off just to kind of do a little back testing. And we see that each level that we could pull back and see that, that zone that comes into play here really did give us an opportunity in the shorter term for a move up. Even if it was a small move, and here was a little choppier, but it eventually got that nice move up. A little move up, a little move up. This is on the daily stochastics. And now one thing you might say is like, well, I don't want to wait 1 month before I take a trade. I want to take trades, I want to take trades at least once a week or a few times a week, and etc. So what we do is, all right, the daily does give us good opportunities, but they're not always setting up. So we break these down to the 60-minute chart. Now, if I look at this chart and I said, well, DuPont's coming down to getting oversold on the daily chart. So I know that we're setting up here, and if we're getting set up on the daily, we have half the formula set up because we need the daily stochastics to be in either an overbought or an oversold condition. And then what we're going to do is we're going to break it down to the 60-minute chart. And we look back at the 60-minute chart, we can see the same time frame and the same signals we're getting, but we're getting them on a faster level. And this is even a cleaner signal. You can see it, just a nice pullback under that zone, and each one of those levels gave you a decent entry. If we look back at it and just kind of back test it, you could see that that level led to a pop, that level led to a move up, this level led to a move up, and this is just recent activity. So how do we combine all this? Well, it's very easy to take the 60-minute chart and trade off of that. That gives you it gives you a faster move. I would say the average trading, the holding time for a trade on a 60-minute stochastic, just a pure 60-minute setup, is probably 2 to 3 days, possibly 4 days. All right, so I would say an average of 3 days is the holding time for a 60-minute setup, meaning that you're going to get an oversold level and you want to really take it off as you get overbought. And that basically what you're doing is you're forcing yourself to recognize certain signals. It doesn't mean it doesn't need to, it's not going to continue to go up. That definitely can go up. It can get in what we call embedded up here and strength, but the scale only goes from a 0 to 100. So once it gets up to 100, you can't really measure continued strength. One way to measure it is looking at an embedded stochastic, meaning the whatever time frame you're using, that stochastic stays up above this level or pinned up against the highs for 3 of those time frames, and that usually means there's continued strength, and there's going to be continued strength. But the object is now is to make a consistent amount of money each time you get into a trade, and that's been discipline. You know, the hardest part of the trade is not recognizing the entry zone is actually really taking the profits out of the trade, because there is a huge factor of greed and just hopium that runs through our veins when we get into a trade. We look for saying, hey, this might be the best trade, I want to hold on to it. But we have to get out of that mentality. We have to really focus on just, you know, making money. This is a business. We want to make money. We want to take the signal and take the profit. So on DuPont, we got in on. Let's see what we got here. We took, you know, I took a few trades on this DuPont, and mainly we're off the 60-minute chart. Last time we took it off was. Let's see what we have, 111 to 112, 109 to 110. So yeah, right here we got oversold on January 9th, and we got that move up here on January 10th. We were already oversold, and I actually took it off, and it was, you know, it was a successful trade. We got a gap up. I took it off, and you can actually see that we kind of consolidated for a day and a half before we headed back up. But it was a very good trade, and then we took another, you know, actually added to that trade onto you know, when we started seeing the embedded stochastics, he added to it and we took profits again on it. The main point is being able to see the signal, take the signal, and taking the profits into the overbought level. DuPont. Now the layover effect, to where we classify what we classify as an HPS setup. An HPS setup is when you take the daily chart and the 60-minute chart and lay them over each other. And laying them over, you're going to see the stochastics are set up on the 60 on 1219, 1228, and 1.6. Now, if we look at the daily, we could see that the stochastics here are oversold 1219. So the 1219 area right here, because it lines up oversold on the daily and on the 60-minute chart, is classified as an HPS setup. All right, and from that point on, you get the biggest moves. So that gives you a really good entry, because the 60 and the daily are set up. Very easy to see. You know, again, you're dealing with a very good stock, DuPont. You're actually in a recognizable little flag here, which I haven't, you know, normally when I send these alerts out, and this is exactly what I do. I could be saying, all right, John, this is easy enough. You know, all I have to do is just kind of, you know, scan for this and do this. Yeah, you could do that. My job is to bring them to you. So we have the HPS 40, you know, an index of 40 quality stocks, and you know, and our programs that tell us when they are setting up, when we have the crossovers, when we have the high probability setups, and then I send them out to you guys, and you know, and I take these trades also live on the air. So, you know, the rotation, the setups here are golden. They're absolutely golden. I stress it sometimes, how important it is to see this. You know, when you see something like this, it's hard to believe that there's other people out there that want to trade, you know, a different style. I mean, there is definitely the scalpers and the scalpers of the world and stuff, but when you want to make consistent money, you have to take the highest probable trades. And until you could, you know, prove that this doesn't work, or there's something out there better, and if there was something out there better, I would be using it. But again, so you can understand that the 60 daily layover gives you the high probability setups, as long as also there's, you know, a recognizable pattern, which is usually a channel underlying support from a channel line or a trend line. We use also move averages, any moving averages, and support and resistance, previous support and resistance lines. So these all come into play. Now we'll take a look at a couple other stocks. Just that, you know, recent stock that we took, which was a high probability setup, was Colgate-Palmolive. Now, Colgate-Palmolive, very good stock. You know, everyone knows Colgate, right? Colgate-Palmolive, big brand, consumer staple stock. And, you know, you look at the stock and you say, all right, this is a stock that, you know, I could follow. And what I mean by follow is like, you know, tell me when this stock is pulling back into an oversold level, and I want to be part of that. Now, if you could look back there and you can see each time this did give you that oversold level, That was half the battle. Is determined in that. So we did see this pullback here last week, and I said, all right, this is perfect. This is Colgate. We're holding above the 200 period moving average. Let's break this down on the 60-minute chart. And 60-minute chart on usually be right around January 11th, 12th, and 13th, we got oversold and we were basing out. So we took our trade into that and got that nice bounce and took it right off as we got overbought. And it was a really good high probability setup, and it still actually looks good, because the high probability trigger on this was really the daily stochastics, and usually the daily, by the time the daily gets back into an overbought level, usually have a nice move in the stock, and the price level has a good shot of continue to push higher. And and this is a recognizable pattern is really a ascending triangle here, so there's a good shot that this might move higher. But really the best entry would have been right here, and if you took that, you have the discipline to take that off into the 60-minute. Now again, the reason we took it off is because short-term trade told us that maybe possibly we got a little overbought. The action in the stock doesn't go straight up, it goes up, and it's measured out. It's measured out. I hear my ice maker in the background. It was freaking me out here. God. Anyway, it's that simple. It's to get in a position where you feel comfortable as a high probability setup, and then you take it off when it tells you to take it off. The choice is up to you if you want to let it continue to run because it has a daily setup and you want to take that. But anytime you take that longer trade, you have a chance of it pulling back. There's nothing guaranteed in the markets, but you can get the better setups if you have the patience and discipline. So Colgate Palmolive definitely set up. The LQDT was another trade we took last week. And this was based just off the 60-minute chart. I said, this is a very bullish stock. We got oversold, and I took that entry, and we got a gap up, and I just took profits in it. It wasn't even overbought, but there was something about it. When we see gaps and we get a gift like that, you get an entry because it's oversold on the 60, and you get a gap up. I take profits and I move on. You get the next setup that rotates in. Like Vale was a great one. Vale, V-A-L-E. This is one we took off today. We just took this trade off today. But again, you can see the 60-minute chart on Vale gives you multiple setups on the 60-minute chart. Here, and here. And you could go back again and kind of just justify the area just by back testing. But, that's, again, in hindsight. But when it happens over and over and over again, when is it that you're going to be able to say, hey, you know what? This is right. This is the best level. Show me a better level on the chart to get in from this level, and I'll take it. But right now, this is telling me the best level to get in. Now, what is the best level overall in this pattern? If we're looking at this pattern, and I'm saying, all right, in this chart, where is the best level to get in overall if I want to get the biggest return? Well, of course, I want to get the biggest return is going from the bottom to the top. So the bottom from the top would represent an area down here. And I could see that the stochastics are oversold here. So we did have an oversold level. But what's really interesting, this is on 12.19. If we go to the daily chart, we could go out here right to this pullback on the daily, and you can see that this is 12.19 right here. 12.19 was oversold on the daily, oversold on the 60, and gave us that high probability setup on Vale, V-A-L-E. Now, the high probability setup is definitely a wonderful thing. It doesn't come around, every day. It's the combination of the two time frames, set up, and it does come up. My job is to get those setups to you, alert you when a high probability setup. That's the new section of the site coming out. Probably within the month is the HPS setup and the alerts that go with it on the HPS 40. So we're going to have we have a very good quality index similar to the IBD 50. A set of 40 stocks that will be alerted to the high probability setups when they rotate in and out of short setups and long setups. So again, Vale would be on that list, and you would get an alert here saying, all right, Vale is set up as a high probability setup. You get a video of the chart, the entry level, and everything else that goes along with it. And you could see the return from that. Now, as that stock moves up, there's multiple trades that happen. You don't, it's hard to say, well, do I want to hold on from December and go up about 5 days and pull back 3 days and then wait for a gap up? No. That's when the 60-minute chart comes into play. And even if you went out here, you could see that you actually had a fast little move up. Stochastics got overbought. Come on. And you got overbought, and you just probably, you would just take profits, and you can actually see that gap down here. And you can see the 60-minute actually pulled back down. So it's kind of kept you out of some dead money here. You would have took profits here. You didn't really get that much of a further upside. Your money would have been stale here. You would have gotten a pullback. You probably could have, entered back here, got a pop up. You can see the overbought stochastics. You probably could have taken it off here, just on the 60, just saying, hey, we're overbought. Let's not think about this too much. Let's not get emotional in the trade. Let's take it off. Ooh, let's take it off. Look, it pulled back. It got back into oversold. Hey, you know what? I'll take another shot at this one. Hey, gapped up, but look how fast we got overbought. You know what? Let me take it off. Consistent returns, all right? Consistent returns. Oh, it pulled back again. It's a recent trade. We took it off today, actually. Boom. It could still head higher, but we want to have consistent returns, and this is how you're going to do it. The high probability setups is a very special trade. That's a trade that comes around, and the probability of this, that trade working out is going to be, pushing 80%. The 60-minute charts and the shorter time frame setups, they're great, but in a downtrend, some of them won't work out as much as the other ones. But they all work out better than nothing. MT is a new entry that we took today, and I'll show you another high probability setup. And again, I do send out a watch list every week, which has a couple of the HPS setups and my own setups on that. NTAP was one of the kick-ass trades of the week. And, again, a kick-ass trade of the week pretty much represents a high probability setup. And again, why do we have a high probability setup here in NTAP? Well, this is a great one because this is a current trade that we're in right now. All right, this is taken this week. We got the push today. I mean, it was oversold yesterday. 60-minute chart. Again, on Friday, I should say on Friday, not yesterday, but Friday. And then we had the holiday, so then we had Tuesday, and then it was Wednesday. So it's really, you take a look at, you can see that we got pulled back here, and it was really on the 13th here. Friday the 13th, we're oversold. And because also Friday the 13th, we're oversold here, really led to a high probability setup. And from that point on, we're already up $1 on the trade. It looks good for continuation. I stressed today, you could have easily taken your profits into this because, again, you have your entry here. Yeah, you have your entry here. You should have your exit here just based off your entry here and entry here, and you can see how that works. And that's $1 trade right there. You have $1 on it. We have $1 on the trade right now. I do say this one's heading higher. So I ended up holding on to this trade. But, like I said, when it comes to thinking, hoping, guessing, that brings the risk back into the trade. And to be super successful in the markets, you have to take that emotion out of the trade. You have to take your guesswork. You have to take your hopium out of the trade. And you have to just stick to a high probability methodology that's going to constantly bring you consistent returns. Like I said, I stress it. Show me something better. Please. All right. Until then, I will continue to bring you these high probability setups, and I'll continue to point them out each and every day on the radio. So I invite you guys to come by DayTraderRadio.com. I'm broadcasting each and every day from market open to market close, live on the air, and you get to see the charts, you get to see the setups. But we do put out a special watch list for the members only. And I definitely advise everyone to try checking that out, and also pay attention to the new HPS website coming, which has the HPS, or the high probability index, on it, which will be getting the high probability setups of the best stocks with the best quality, highest probable setups in the market. So that's some of the trades we're looking at this week. Hope it would. I think that's about it for now. I just want to really stress the importance of taking the profits on the signals. Anything other than that is gambling. You know, you can't stress it too much. There was a couple, actually, you know, you can't say that every trade's going to work out. There was a couple trades that were setting up. The CSH here, we had a gap down. Yesterday, took an entry in CSH. Stochastics pulled back into an oversold level. I took the entry here, and we had a gap down because they pre-announced. Now, there's certain things in the market you're never going to be, you know, it's never going to be the perfect setup. You know, sometimes you're going to get that smack with bad news, but that's part of the game. It's like anything else. You step into the batter's box, every so often you're going to hit with a pitch. But if you constantly wait for your pitch and you wait for the one over the strike zone, and you take your best swing, you know that you're going to have your best chance of getting a hit. You know, every so often you're going to get a wild pitch. Something's going to happen that's kind of fluky, and that happens. That's part of the game. But consistent returns with a couple bumps in the road is what you're looking for as, you know, the best way to make money in this market. I'm DayTraderRockStar, and I hope you enjoyed this video. Give me some feedback. If you want to know more information about the HPS 40, definitely email me, DayTraderRockStar or actually DTRS @daytraderradio.com.